Watching Last Check here on News 9, where we bring to you the lowdown of the day's action on the Lal Street. And Indian markets, the recovery continues as Nifty ended above 22,350 levels on Tuesday, extending its winning run to 3 sessions now. The 50 share index has now recovered close to 600 points in this run up. I mean, Nifty today opened gap up just below the 22,450 mark, but lack of follow-on buying meant, we couldn't rise any further from there on. Ultimately, what it was a range-bound session, but one that ended with modest gains. But there are a couple of things that you need to look out for. One, the bulls are showing signs of exhaustion as incremental gains on a day-on-day basis. Those are hard to, getting hard to come by. Because remember, on Friday, we saw a near 400-point rally from the day's low. On Monday, the upside was, much smaller, about 190 points. But today, it was just 30 points. So, perhaps the incremental gains, those are, getting hard to come by now. So, keep an eye out on that. Second is that we failed to close above 22,400 level. Now, this is key because it pretty much coincides with the 61.8% retracement level of the entire 1,000 point drop from the record high of 22,775 to the April low of 21,777. To be exact, the 61.8 works out at around 22,394, but for all practical purposes, it's 22,400 that needs to be taken out next. All that said, Nifty still managed to close above the 20 DMA, and in fact, at no point, it fell below the 20 DMA, so that perhaps should keep the bull in play going forward. But the biggest concern, at least for me, was the drop in volatility, and not as much as the drop per se, but the implications of it. India VIX dropped almost 18%. This was the sharpest single day drop since May 2019. Now the volatility index has now fallen to its lowest levels in the past 9 months. And with Nifty nearing its resistance zone, the big one, 22,500 odd levels, VIX cooling off towards 10 or potentially lower may not be a good sign for the near term. This is because a drop in volatility when the markets are near resistance level could suggest that a correction may be in the offing. In theory, it could also indicate a potential breakout on the upside, but either way, a big move could be in the offing, and look at it as a calm before the storm. Of course, the big question will be which way will the tide flow. For that, I think 22,500 odd levels is the key again, because remember, this was a zone where we had reverse course multiple times in the past, and once it was captured with conviction, the markets went on to surge another 250 odd points from there on to the previous record high, which again was 22,775. But looking at the overall texture of the markets now in conjunction with a strong recovery, the bias certainly is on the upside. But let's not forget that we have enough and more reasons to worry about in the next 2 months, both on domestic as well as the global front. Among global headwinds, the biggest one, of course, to track will be what happens next in the Israel-Iran conflict. So far, no news of escalation is being looked at as news of de-escalation. But since the situation still over there, remains uncertain, it's very prudent that we keep a track of that. Also, the bond yields in the US, the inflation trajectory, especially considering the recent surge in crude oil prices, that could have negative implications for the emerging markets like India. But apart from the global headwinds back home, the focus will of course be on individual stocks as we are in the midst of the fourth quarter earnings season. Also, polling for the general elections have also begun, so expect volatility over the next couple of months. Then there is the full budget that will come out in July, and the markets are also keeping an eye out on the monsoon trajectory. So all these factors will is more than likely to keep the market on the edge in the near term. But joining us in the studio now is Mr. Kranti Bhatini of Wealth Mill Securities. Sir, thank you for giving us time here on News 9. And I want to begin by asking about this big, massive 19% drop we saw in India VIX. How are you reading this?
Yes, as you perfectly explained about the VIX and its implications. What we can sense is some kind of, at the higher end of the market, what we can sense is traders are not initiating long positions. They are unwinding their positions, and everybody are in a wait and watch mode at this point of time. So that's the primary reason for the VIX to coming to the range of 10. That's what creating is. At the higher end, in the large caps, people are not initiating in the both in the derivative market as well as in the cash market also. They're not going initiating the positions. But by and large, right now the action is more in mid and small cap, and there is a stock specific action what we are seeing. Of course, you rightly mentioned that these are the resistance zones going ahead. Market looks on the higher end of the market. Market looks adjusted. And also, it's not able to get any kind of strong positive triggers at this point of time. That's what the key cause of worry at this point of time.
All right, and there are also multiple global factors that are in the play. The situation, what happens next as far as Israel and Iran is concerned. The bond yields in the US, although they have been pretty much flat on a day-on-day basis for the last couple of sessions at 4.6, it's still elevated. Crude prices, they have come down from $90 a barrel, but still, in that uncomfortable zone for us. How big of a factor do you think would that be?
Yeah, the uncertainty is still there, but what we can sense last couple of days and last week is, despite of the geopolitical issues that erupted, they have not created any kind of disruption with respect to the supply chain of the crude is concerned. Of course, we have came across the news that there are reciprocal attack by Israel on Iran. But the news is, even though there are no signs of any kind of supply chain disruptions with respect to the crude oil supply chains are concerned, that's where the market is a little bit taking the breather, and that's where we can see some kind of consolidation with respect to the crude oil price. Right now, as you rightly mentioned, there is no escalation or de-escalation at this point of time. We need to wait and watch, closely observe the movements, how things are going to unfold in the next couple of weeks. That is extremely crucial. The movement of crude oil price is extremely important given the kind of volatile nature it's exhibiting in the last couple of weeks, and also the impact, especially on of the crude oil price on Indian economy, is extremely crucial going ahead with respect to the rate cut and also the policy action is concerned in India.
Move on to local factors. One another thing that I wanted to pick your brains on is, the commentary that has been coming out from the Federal Reserve. I mean, we have seen a full swing pretty much in the last 1 month. It started with the last policy decision when Mr. Powell stepped up and said that we might see 3 rate cuts this year. From there on, other voting members have said that maybe hold on, perhaps inflation still remains a problem. Maybe we won't see a rate cut this year at all. But now, New York Fed president, a couple of days back, he came out. He's also a voting member. He said that maybe we need to look at, increasing the interest rates. What are you making of, this sudden shift in stance of the federal, the US Fed? What's your sense of things over there, sir?
Yeah, Suyash, these are the commentaries that keep comes. If you observe the long-term track record of Federal Reserve, one thing is they said in the beginning, Powell has told couple of quarters the inflation is transitory, nothing to worry. And the next 2 quarters, they said it is very sticky. And last quarter, they have been telling we are made all the effort. Now it's yielding. The effort has been yielding right now. Ready for a rate cuts, and they have given some kind of guidance also, but they're still telling is what the version of Federal Reserve at this point of time is just hold on, and the entire markets have been waiting for a rate cuts, but wait on, we might go for rate hikes also. But Suyash, if that kind of scenario is coming, that's going to definitely disrupt the party, equity party that's taking place across the globe. So we need to wait and watch closely how the Fed action is going to be.
All right, and interesting to see. I mean, we were just joking around. It's time to perhaps rename FOMC as Federal Reserve Open Mouth Committee because of the kind of comments and the wild, swings in, the stance that we have witnessed in the last couple of months. But so stay with us. We have much more to discuss with you, but it's time to slip into a short break.
India's ever-evolving urban landscape is witnessing a new revolution. And this one comes on four wheels.
The affluence has been growing. Cars are becoming more a reflection of what you are.
Nobody's talking about hatchbacks. Now what next? The next is the SUV.
The contribution of SUVs is close to 55-60% of the automobile sales these days.
Is that even manufacturers like to sell SUVs?
So, how did a nation obsessed with fuel economy come to love heavy gas-guzzling sports utility vehicles? Let's look at how India fell in love with the SUV.
This and more. Streaming on News 9 Plus. News is now content. Subscribe and get free vouchers.
Welcome back. You're watching Last Tick here on News 9, and Kranti, I'll come to you directly because we have got lots to discuss with you. One domestic factor that I was tracking was Vodafone's FPO, which by the way was the largest FPO in India, and this was a big hit. I mean, especially from the institutional side of things. I mean, this quota set aside for QIBs, the qualified institutional buyers, was subscribed over 19 times. Kranti, how are you reading this? I mean, is it because the FPO price at 10 to 11 was perhaps cheap and attractive, or is it that they are betting big on the turnaround because a lot of this money, 70% of it, is going towards capex?
Yeah, so as you rightly mentioned, they're betting for a complete turnaround with respect to the Vodafone prospects are concerned because of given the kind of macro dynamics the Indian economy have. So Vodafone is going to have a sustainability. So that is the reason we can see a whole host of QIBs have been placed with respect to Vodafone FPO is concerned. It received a very good, robust response from the institutional investors. So one thing is next couple of quarters, how the plans are going to be, the rollout of 5G, and also how they are going to improve the client base, subscriber base, and also the improvement of the ARPU. So that's where the key dynamics are placing at this point of time. Given the kind of uncertainty, the investors got into a good valuation zone at this point of time. So the long-term outlook of Indian telecom market is concerned, it looks vibrant. From a duopoly, still there is a chance for the third operator in India. That's where it's creating the interest. The promoters' interest also creating the interest among the institutional investors. So for a retail investors are concerned, we have witnessed some kind of skittishness with respect to the subscribing for the FPO is concerned. So the high risk appetite investors, given the kind of the activity what we witnessed in Vodafone FPO is concerned, one can look into considering at these valuations at this point of time because of the sustainability matrix and the uncertainty towards the business sustainability has came down right now. That is the reason one can, if the investors have a high risk appetite for a longer term, one can consider Vodafone IPO, Vodafone stock at this point of time.
And I mean, considering the kind of surge we have seen, 11.5% rally in Vodafone Idea. I mean, those who will perhaps get the the shares, they are at the the upper band of the entire price range of at 11. They are already sitting at about 31%, so perhaps a good bet for them. But you were talking about the telecom space in general. I mean, that is a space that is buzzing off late. Apart from the strong interest we saw in Vodafone's FPO, Bharti Airtel has been in the spotlight. The stock has surged nearly 45% in the last 6 months. Even today, it surged over 3% and hit a fresh record high. Its group company Bharti Hexacom, after a stellar debut of, with a 30% listing gains, has surged another 20% in less than 2 weeks. Jio, in the unlisted space, continues to do well on a quarter-on-quarter basis, as we saw in the results of Reliance Industries. Also, there are speculations of a tariff hike that are making rounds, which would further, boost ARPUs for these companies. So, is it a good time to enter this space, Kranti, or is most of the upside already factored in?
The good news for the investors is, Suyash, at this point of time, the price war seems to be over. Okay, now people are looking at the profitability, both Jio as well as Airtel is concerned. So that is the reason the interest is getting created at this point of time. So if the tariffs are if move in the coming quarters, that's going to create some kind of interesting activity with respect to their margins are concerned. So that's where that is the one of the key reason for Vodafone's FPO's success also. That's where the market is anticipating at this point of time. One thing is the price wars are at this point of time are in a consolidation phase right now. So that's what creating the interest with respect to the sustainability of the business models are concerned.
But would you bet on this space, and what would you pick if you had to bet on something? Because we only have 2 listed players. The big ones, of course, are Bharti Airtel, Vodafone Idea. Then we have smaller players as well. Bharti Hexacom is another one. What would you pick, and what would you add to your portfolio if you are betting on this space? That is.
Yeah. Right now, what we can expect from these business prospects sector is it's quite robust and vibrant. But what we can expect is a mid-teen kind of return still one can get from these business models at this point of time. Definitely, for a moderate risk appetite investor, one can consider Bharti Airtel as the primary pick. And if the investors have a high risk appetite, definitely they can consider Vodafone for a medium to longer term perspective.
And I mean, the kind of returns Vodafone Idea has given over the last, last 6 months or even a year, I mean, it has surged close to 20% or so in the matter of last 6 months, 32% actually, from what my producers are telling me. In the last 1 month, it has surged close to 8%, and in the past 5 days, close to 13.4%. And most of the upside came today. Remember, Vodafone Idea surged nearly over 11.5% today. It has crossed 14 mark in today's trading session. In fact, Bharti Airtel also surged to its lifetime highs. The stock rallied over 3% today, and it has been a tremendous wealth creator in the last 6 months. As we have seen, the stock has delivered close to a 45% returns in that time frame. So perhaps this is the space that one can look out for. In that, we have 2 listed players, Bharti Airtel and Vodafone Idea, but there are multiple smaller companies. Bharti Hexacom is another one. We saw a stellar debut for the company. It got listed at a premium of about 32% or so. From there on, in a matter of just 2 weeks, it has rallied close to 20%, nearly about 20% or so. Although we saw some bit of a price correction in today's trade, but overall, even looking at the prospects of it, and the reports that are coming out on Bharti Hexacom, the street looks extremely bullish on the prospects of Bharti Hexacom. But that's enough on the telecom space. Let's slip into a short break. Kranti, please stay with us as we have much more to discuss with you on the other side.
Currently, the industry is facing a lot of challenges as far as demand is concerned. Basically, the US markets has slowed down because of high inflation.
So obviously, diamonds being a dream product, something which doesn't have a utility value or is seen as a luxury. So that obviously goes off your shopping list. That's the first item that will go off your shopping list, especially in recessionary trends.
That lab-grown diamonds are not mined, and they do away with the entire mining. So they save up on all the environmental damage that is associated with mining, and of course, the mining cost, which is why they're even more affordable.
People that is impacted by all these recessions are the artisans, are the people who work in this industry, right? But I think lab-grown diamond has
allow them to actually use their skills in the same product.
This and more streaming on world's first news OTT, News 9 Plus. Download now.
You were the chosen one to direct Mr. Bachchan for his first endorsement, for his first appearance on the small screen.
It was a life-changing moment.
Have you been a rebel with a cause?
There was a sense of responsibility, there was a sense of frustration.
Are you worried about cancel culture?
You tell a story with a fierce psychosis, you're gonna spoil it anyway.
This and more. Streaming on News 9 Plus. Subscribe and get free vouchers.
Welcome back. You're watching Last Check here on News 9, and the 650 crore initial public offering of J&K India is now open for subscription, and it will be open for subscription till Thursday, which is April 25. The price band of the IPO is set at 395 to 415 rupees per share, and it is a mix of fresh issue and an offer for sale. Now, Kranti, coming to you, I mean, the company is well recognized heater company in India. It has a market share of about 27%, but the issue, the price, the valuation, I mean, it seems it is aggressively priced at the upper price band. The company is valued at a PE of 49.38. The EV to EBITDA, or enterprise value to EBITDA, is at 33.1x. I mean, considering all this, what's your verdict on this IPO, sir? Worth subscribing, or will you give it a pass?
Suyash, one thing, the recent IPOs, what we have been witnessing in the past 18 months, we are getting a new interesting business models. Normally, people are tend to get into, look into the listing gains and all, but for a longer term perspective, there are new business models are getting added to the market. Investors need to observe these new business models keenly if the investors are looking for a longer term. Given the kind of the business nature J&K operates, and also the future outlook of the capex, and also the infrastructure theme is concerned, so J&K have that edge to take the advantage in the capex cycle, and also the kind of expansions, capacity expansions, what we are witnessing, and the businesses have plans, strong capacity expansions. That's where J&K is going to take the advantage. So at this point of time, if the investor have a high risk appetite, one can add the stock at the one can subscribe during the IPO. And where I'm more keenly is, if I have to make any serious investment proposition in J&K, probably I wait for the couple of quarter results and get the more information about the company post listing. That's where the serious investments can be made in this company for a portfolio perspective. If they are given the kind of rally, and also the positivity what we are witnessing in the secondary market at this point of time, and also the IPO market at this point of time, one can subscribe for this IPO, given the kind of the long-term capex outlook is concerned at this point of time. Despite of valuations are a little bit stretched, but still, given the kind of the business model the company carries, one can look into this stock, because these kind of companies are rarely comes into the market at this point of time.
All right, that's the verdict on J&K India's IPO. But sir, before we let you go, I just wanted to get your view on the rally that we are seeing in commodity. And it's not just gold that is on a bull run in 2024, but silver, coffee, zinc, other commodities including copper, aluminium as well. I mean, they all are at multi-month highs. Should a retail investor add them to their portfolios, and how can they gain exposure to these commodities?
Yeah, one thing is what way the investors are going to invest in this. One thing is whether they are trading in the future, or if they want to have precious metals in their portfolio. Personally, I have been adding silver in my portfolio from quite a long time, because of the industrial usage the silver derives, and adding gold in one's portfolio is always a hedge. But what quantum is important for the investors' portfolio is concerned. Coming to the metals are concerned, as the embargo that's made on Russia with respect to in the regions by US and UK, that has been creating some kind of demand supply mismatch with respect to the base metals are concerned. Coming to the precious metals sector is concerned, one can add silver in their portfolio. I have been quite bullish with respect to the silver when compared to gold, because one reason behind the demand and supply mismatch is silver have a more industrial usage, whereas the central banks have been buying gold. Even the People Bank of China has increased their gold reserves. And also what we can sense, Shreyas, there is a quantum of liquidity that has been chasing the precious metals. That's where the demand for these precious metals has been going up. One can add through ETFs into their portfolio if they want to add gold as the part of the silver, as the part of their portfolio.
Alright, and interesting you picked up silver because, sir, we have been discussing about silver and gold. You know, silver is also at a 3-year high, gold is at all-time high, but silver, of course, has industrial usage as well. And especially with, China on the mend, maybe it's silver that, continues to rally from here on. But we'll end at that, sir. Great insights from you as always. Hope to see you again very soon in the future.
Sure, Suyash, always my pleasure to share my views with you.
But with that, it's a wrap on this edition of Last Week. We'll see you tomorrow at 9:45 AM on First Week. Thank you for watching.
How do you fulfill that promise? Because ultimately expectations have to be met. If you look at the political landscape, is it really changing for women? And what is the inability of the forces that dead bodies surface, but not the living people?
Currently, the industry is facing a lot of challenges as far as demand is concerned. Basically, the US markets has slowed down because of high inflation.
So obviously, diamonds being a dream product, something which doesn't have a utility value or is seen as a luxury. So that obviously goes off your shopping list. That's the first item that will go off your shopping list, especially in recessionary trends.
That lab-grown diamonds are not mined and they do away with the entire mining. So they save up on all the environmental damage that is associated with mining and of course, the mining cost, which is why they're even more affordable.
People that is impacted by all these recessions are the artisans, are the people who work in this industry, right? But I think lab-grown diamond has allowed them to actually use their skills in the same product.
This and more streaming on world's first news OTT, News 9+. Download now.
You name a place and there is a marathon.
Running in the snow is a much more tougher thing than running just in the oil.
Everything is very, very different from